What's up traders, welcome back to another educational video here at LiquidFX. So in today's video we're going to be discussing the concept of liquidity and inducement, something that's used a lot in the SMC space, specifically not so much the ICT space but more the SMC space. So we're going to be discussing what liquidity is and what inducement is. So simply put, liquidity exists everywhere, right? Liquidity is essentially the fuel of the market, or the food of the market, however you want to see it, right? So we see liquidity in the three main forms as listed here on the screen. We've got structural highs and lows, we've got equal highs and lows, and we've got trend lines, right? So simply put, liquidity exists everywhere because these three things exist everywhere in every form. So if we look at it this way, what we're going to see is we see liquidity in the form over here. So what we see is we see liquidity above and below equal highs and lows. So we're going to see liquidity in this region. The red lines represent liquidity points. We're going to see liquidity here, and we're going to see liquidity here. All right, that's structural highs and lows. We also see liquidity in the form of equal highs and lows, right? So if we get a channel over here, sort of a sideways range, maybe like the Asian range, for example, what we see is we see a buildup of liquidity in the form of equal highs, and below the range, we're going to naturally see equal lows. This is liquidity as well. Now, the third, a very prominent liquidity pool, is upward sloping liquidity, and of course, we can't forget its opposite, downward sloping liquidity, right? So we see liquidity being built up in these three ways, where we see channels, we see pools of liquidity, right? Pools of liquidity often build. Now, what's the key thing to take away from here? These are very prominent patterns, right? These are very, very prominent patterns in any market, whether it's crypto, forex, stocks, indices, commodities, whatever it is you're looking at. Identify liquidity is a skill, and it's something that will take time, effort, and determination to develop over time, right? So we see liquidity in main three areas. We see equal highs and lows over here. We see trend lines, upward sloping and downward sloping, both respectively represent liquidity pools, and we see structural highs and lows as well, which also serve as liquidity points. Okay, so now we want to know, what is the connection to inducement? Inducement is a big word that's thrown around, but inducement is essentially liquidity in a specific area, right? So liquidity exists everywhere. So naturally, inducements will exist everywhere as well, because these words are almost interchangeable. But an inducement is a specific area of liquidity, right? So an inducement, it's important to understand, an inducement can be any one of these three things that we've just mentioned, whether it's equal highs and lows, whether it's structural highs and lows, or whether it's upward sloping trend line liquidity, right? So what we need to understand is that when we're in a bullish structural dealing range, for example, so if we just use our premium and discount tool and we draw out what's known as a bullish break, for example, we see a bullish break over here, so we're bullish, and it's important to understand that we have our POI for buying in the discount, for example. This is going to be a bullish example. So if we just analyze where our POI could be, we see in this sort of region here, right? So we're going to be waiting for a breaker structure, and we're going to be waiting for price to head down to this POI over here before shooting up, right? Now, typically what's going to happen is we're not going to see price the way I've just drawn it. We're not going to see price move in a straight line, mitigate this and feel some imbalance before jumping higher, right? That doesn't happen very often in the markets. Yes, it can happen, once every 20 trades or something, but often we don't see that. We don't see price behaving in this way in and around our POIs in any structural dealing range. So from there, we have to understand what is going on in this region over here. What is going on over here in this region? So if we look carefully, right, we have our three examples. Example 1, which is a structural high and low, example 2, which is equal highs and lows, and example 3, which is trend line liquidity. So we just take example 1, for example. What we could see is this. We could see price head down, right? And we're going to see this. Now, you have to then ask yourself, we often see this with POIs, and we're going to jump onto some live examples afterwards. But one of the forms of inducement, so there's three main types of inducement, and this is reflected in the fact that there's three main types of liquidity pools. So when we look at it this way, we need to understand our first liquidity pool is a structural high or low. So in this case, we're going to be dealing with a structural low because we're obviously bullish in this example. So we see the red line being drawn here, which is a liquidity point. So now what do we see? Price engineers liquidity because it's stopped just below the POI, okay? Now we see price often mitigate into the POI before we see it move higher. This is the first form of inducement, right? So this is this form of inducement being applied over here, structural highs and lows, right? So what we see is we see a low that gets formed. We see a low hovering just above the POI. This is a liquidity pool, right? This is liquidity. So if we just label this liquidity with $3 signs, easy for people to understand and remember that this is essentially liquidity over here. So what is the purpose of this, right? What is the purpose of this? If we just draw this again, when we see price come in and engineer this liquidity, what we see is we see price engineering liquidity to then be swept, filling in any imbalance in the discount before we continue to move higher, right? So this is inducement number one, you can say. This is inducement version 1. Now we go on to version 2, which is very, very similar to version 1. But what we're going to see now is this. We're going to see the second form of liquidity being produced. So what we're going to see is we're going to see price come down, and we're going to see price forming equal lows just below our POI. Now we see a mitigation of the POI before it moves higher. So it's the same principles as before, really. So what we're seeing is we're seeing equal lows being dropped just above the POI. Now, also, what's the reason for that? It's the same reason as example 1 with the structural highs and lows. When we see equal lows being produced just above our POI, it's essentially engineering liquidity. And that pool of liquidity is used as fuel for the market to then mitigate into a POI and then moving higher. So we can use inducement as a form of increasing our overall confluence with a lot of our POIs, bullish or bearish, right? So this can be flipped for bearish examples. So this over here, again, let's just go through this one more time. This over here, as price comes back into the discount, what we're going to see is we're going to see a formation of equal lows before we sweep them coming into the POI, filling in, mitigating any fair value gaps before continuing higher, right? So this is what we see typically with equal highs and lows, more often than structural highs and lows, okay? And the last one, as you've already guessed it, right, is we're going to see the trendline liquidity form. So it's very similar to equal highs and lows, just the shape is a bit different. So as we come in, what we're going to see is we're going to see this, for example, we're going to see this. Then we see an aggressive sweep into the POI, mitigating the fair value gap before continuing higher. So I've already released a video on order blocks and POIs, so you can check that out as well if you want to understand how we decipher our order blocks. But if we look here, we see inducement in the form of a trend line. Now we see price sweeping the liquidity before moving higher in line with upward sloping trendline liquidity, and the same will be true and analogous for a bearish trend, right? So we're going to be looking at a market now. We're going to be looking at a live market. So this is ES. So this is the E-mini S&P 500. And we're just going to be dissecting our concepts of liquidity and inducement over here onto the live chart. Okay, so as you can see here, just a quick overview of the chart. We have had a bullish switch of structure in this region over here, and we've just been trending higher, right? So we've just seen price moving in this direction, okay? Ooh, moving in this direction. So if we just go here and we can begin to look at the types of liquidity that get formed, sorry. What we see here is we see a structural shift here. So we're going to analyze our structure, right? Very basically. We're going to use this orange structural annotations to decipher our structure. We're going to use that as a vehicle, like I've said in previous videos. Now we've had a break of structure in this region. So we're going to mark this with a break of structure. And now from here, let's dissect the liquidity that's been going. Let's dissect the liquidity in this example, right? So what we see here is we see trendline liquidity that gets formed, right, in this region. So the red lines will represent liquidity pools, right? So what we see is, again, price coming in, breaking structure before coming in, mitigating and sweeping the liquidity, filling the imbalance before continuing higher, right? So this is the trendline liquidity form. So this is what we see over here. This is the trendline liquidity form, right? So this is what we see over here. We see trend line that gets formed in this region over here, okay? Now what do we see? We see a move up, leaving a fair value gap, breaking structure again. So now we see structure being broken again in this region. So we just use the orange dots to mark out our structure. We see structure being broken again just over here. Now what do we see? From here we see equal lows that get formed over here just before we see price break down. And yes, we don't quite feel the entire imbalance, which is fine, but the concept is we engineered liquidity in the form of equal lows. We swept the liquidity before essentially seeing another break of structure. Now what do we see? Let's go over here. Now we see a very clean example of a trend line, the cleanest trend line example you can think of, right? So if we go down here, we see 1 touch, 2 touch, 3 touch, 4 touch, almost 5 touches. In fact, we do have 5 touches, okay? And it's important to understand, if we go here, we see a low over here as well. And we see another low over here as well. And we see a low over here and here. So we see equal lows and trendline liquidity that both get swept simultaneously after this break of structure as price mitigates over here. So this wick over here is a sweep of liquidity, right? Sweep of liquidity over here, just over here. What we see here is a sweep of liquidity, right? So again, if we just go through this again, we've had a clear break of structure in this region. So price has broken structure just like this. So if we just label the break of structure black, like so. So we've had a 4-hour break of structure, and we've seen a trendline liquidity and equal lows get swept by the wick before we continue higher. So we've had another break of structure in this region over here. So this is going to be our high. This is going to be our low. And now we just continue on with the break. Now we can begin to dissect price again. As you can see, we have a fair value gap in this region. We see price create a trend line liquidity just over here in this region. If we just use the red line to be consistent, we see a sweep. But we also see another sweep over here, which represents our structural liquidity, right? Because remember, we had structural liquidity as well. We had price come in before moving higher. So what we see is we see a sweep in this region. So we see trendline liquidity and structural liquidity being swept before we move higher, right? So it's the same thing that we're seeing over here in the live markets, on ES, okay? We see the same thing over here. We see a break of structure over here to the left. We see a break over here, so we see the last high get broken. If we just keep that in black, for example, we see the last high get broken. We see a structural low over here. We mark that in red. We see a structural low over here, which gets created, swept before the break of structure continues. Bearing in mind, all of our POIs have fair value gaps after them, right? Now we just continue higher, following the market using the same logic, right? Well, what we see over here, if we just zoom in over here, we see a break of structure, leaving a fair value gap. And we have equal lows over here, or trendline liquidity, whatever you want to call it. Equal lows, more like, because we have all of this over here. Take a look at this. We see price mitigate after this engineered liquidity has been swept. We see the same thing over here, right? We see the same thing over here where we see price engineer a low, sweep the low, and then continue higher. So essentially what we're seeing is we're seeing the breakdown of liquidity over and over again, whether it's trendline liquidity, equal low liquidity, trend line and equal low liquidity, more trend line, structural highs, structural lows. We're seeing all of it being engineered in the market, right? With our POIs, okay? With our POIs. So if we go back to this theory just to sum up what we've learned today, liquidity and inducement. So what is liquidity, right? Liquidity is the fuel of the market. It exists anywhere and everywhere in the market. Structural highs, structural lows, trend lines, upward sloping, downward sloping, right? So from here, because liquidity exists everywhere, you don't want to be trading everywhere because that's not trading, that's gambling, really. So what do we do, right? We identify our POIs using our 3 rules. If you haven't checked that video out, I highly recommend you go and check out the order block video. And what we do is we use these 3 forms of liquidity in and around our POIs to then pick our high probability POI. So if you have a POI without inducement, maybe don't trade that one. And having said that, glad to see you all at this video and I look forward to seeing you in the next one.